In the world of cryptocurrency, there's always something new going on. From the crash to whatever's causing it, it can be hard to keep up with all the latest news. But don't worry, we're here to help. In this video, we'll give you all the latest cryptocurrency news. Kicking us off, some of the reasons why all investors will feel the pain from Carnage in Bitcoin, Ether, and the rest. The year 2022 has not been a good one for crypto assets, as investors have seen sharp profit booking after a solid rise in 2021. Bitcoin, the cryptocurrency with the largest market capitalization, closed at around 17.55 lakh rupees on 13 June 2022, its lowest level since December 2020, on growing fears of the US slipping into a recession and in anticipation of rising interest rates. Bears are in a ruckus, and crypto investors have no refuge now as Bitcoin has taken a big hit. The entire market has fallen. One can just hold and sit tight, says Rishi Anand, partner at DSK Legal. Let's look at the reasons for the price crash and investment strategies for existing and new crypto investors in the current market conditions. Bitcoin, Ethereum, and other cryptocurrencies declined on 13 June because data released on Friday showed U.S. retail inflation unexpectedly climbing to a fresh 4-decade high, reviving fears of prolonged Federal Reserve rate hikes that could stall economic growth. Global policymakers are making efforts to combat rising inflation, rising interest rates, and a correction in the S&P, Dow, and Nasdaq. Tech stocks in the U.S. and commodities, gold and silver, have nudged crypto investors to shift. Adding to investors' pain, Terra's Luna debacle and heavy institutional selling were the other key reasons for the crypto sell-off, says Jagdale. Siddharth Sogani, CEO of Crebico Global, says that cryptocurrencies, because of their higher volatility and smaller market size, fall steeply, but there is likely to be firm support at around 18,000 for Bitcoin. Jagdale warns that if the Bitcoin price falls below the 20,000 mark, things might get uglier and investors should brace themselves for worse price action. What does it mean for the future of the industry? Bitcoin has wiped out all the gains it made in 2021 and has been down by almost 72% from its all-time high of 69,000. The de facto king of the cryptoverse nearly hit $20,000 during this ordeal, which was its 2017 all-time high. With Bitcoin down 70% and Ethereum a whopping 79%, it's pretty apparent what to expect with altcoins. They are getting absolutely smashed to death. Numbers speak for themselves. 99.8% of the cryptocurrencies have already fallen by at least 70% from their peak. At the same time, 98.8% have lost 90% of their value, according to data from CoinGo Live. Such carnage has wiped out more than $2 trillion from the cryptocurrency market. The worst is not over yet. So what happened? For starters, a drawdown was expected after the insane bull rally we witnessed in 2020 and 21. This wasn't the first time that the crypto market experienced such a meltdown. For instance, Bitcoin and crypto have gone through such cycles 3 times now. After all, what goes up must come down. In the last few weeks, several significant incidents rocked the crypto market. After the crash of stablecoin Terra USD, one of the biggest lenders in crypto, Celsius, took the spotlight for being on the verge of insolvency. And now the rumors surrounding the blow-up of the fund 3 Arrows Capital, or 3AC, have frightened the market and exacerbated the effects of the downturn. This goes on to show that, as an investor, no matter how small or big, proper risk management and a healthy plan, which is not thrown to the wind during bull mania, are extremely important for survival. However, there is more at play. A lot is going on in the crypto market. However, the internal cryptocurrency dynamics aren't the only factor in play here. In fact, the macro has been playing a huge role since crypto prices tanked in March 2020 in tandem with the stock market. Then, central banks and governments' response to the market shock with unprecedented interest rate cuts, money printing, and stimulus kicked off a multi-year bull run for equities and crypto. But all this money into the system has pushed the prices of goods to rise, with the Consumer Price Index, or CPI, hitting 8.6% in May, a 40-year high, and the most significant year-on-year increase since December 1981. Inflation makes everyone poor. Now, to bring inflation under control, central banks are unwinding the same policies that propelled stocks and crypto to new heights in the first place. S&P 500 is also officially in a bear market as the index falls back at January 2021 level. The Federal Reserve has responded with a hike in interest rates. This makes it more expensive for banks to borrow from the central bank, which in turn charges customers more to borrow money, resulting in less money in the economy. Amidst these macroeconomic changes, the crypto market can't be expected to flourish, with retail savings declining and inflation rising. Investors are now rushing for the safety of cash, running out of risky assets like stocks and crypto. Risk assets tend to carry high upside as well as high downside risk. As we've been saying, crypto prices are not immune to Fed policy, and the market is simply following the "don't fight the Fed" mantra, and this has the crypto crash mirrored mirroring the stocks. Next, what about the future? This crypto carnage has investors spooked, and several are cutting out their losses and moving out of the space. With so much going on, many have also begun to question their decision to enter the space in the first place. Meltdowns in the crypto space are not uncommon, but if this is your first crypto market downturn, it can be scary. The market has been pronounced dead several times in the past, 2018, 2015, and 2013, only to come back stronger each time. But of course, with all this gloom and doom, many have begun to wonder if there's still hope for the cryptocurrency industry. The fact is, interest in crypto is still strong. Several surveys from this month show that the investors, wealth managers, and hedge funds are still interested in crypto and planning to be involved in the sector. The most important thing is, like the internet before it, crypto innovation continues regardless how the prices are doing. Over this past year, Bitcoin has gained a global adoption and is now held by institutions, corporations, countries, and millions of individuals. DeFi is building the foundation of a peer-to-peer financial system with no single party in control. NFTs, meanwhile, are taking crypto mainstream and leading to the birth of billion-dollar industries across art and gaming. As such, this is simply the time to focus on building. Finally, what can be done? While the future may look bleak right now, after so much pain and drawdown, opportunity comes to those who prepare for the long term. After all, the ethos of the sector is as strong as ever, with the core of the cryptocurrency lying in decentralization, disintermediation, and direct ownership rights. With all the speculation and sky-high valuations diminishing, this would be an excellent time to start accumulating some coins slowly, especially for those who don't have any exposure to cryptocurrency and are waiting for the next bull run. Crypto's inherent high volatility tends to scare investors, but this is not a bug, but rather a market feature. Not to mention, despite its high volatility, the sector has survived and grown significantly over the past decade, while making many millionaires along the way. Throughout these cycles, the global crypto market cap, developer activity, user adoption, and social media activity have all only increased. So is buy the dip the right step here? While the low prices are a lucrative opportunity to buy some coins cheap, prices can very well continue to fall even further. The key is always to have dry powder to deploy when trend reversal looks sustainable, and choose the coins to add to your portfolio wisely. Not every crypto asset will be able to survive the fight with the bears, after all. All in all, the fear hasn't abated yet, thus it's best to prepare for the worst while focusing on surviving the bear market. And don't forget, due diligence is mandatory. As a bonus, the end of easy DeFi yields is over. Decentralized finance, or DeFi, has been one of the areas of crypto most affected during the recent market downturn. From the collapse of Anchor and other DeFi protocols in the Terra network to the constant pressure in Lido and Steth, as well as the insolvency of large asset managers that were active in different protocols, there have been many events that have challenged DeFi's entire value proposition. Unsurprisingly, the total value locked in DeFi protocols has shrunk by about 70% from its all-time high to $74 billion today, and the native yields in DeFi protocols have contracted significantly. These recent shocks have drastically changed the composition of the DeFi market and the nature of alpha, above-market returns, and risk in DeFi protocols. In this article, we outline a framework for the evolution of alpha and risk management in the next phase of the DeFi market. Easy yields were the main narrative of the 2020 to 2022 rally in DeFi. An over-leveraged environment for stablecoins, as well as aggressive incentive programs, enabled traders to capture astronomical yields without the need for sophisticated financial logic. The ease of generating alpha also induced a lack of attention to risk management mechanisms. The nature of DeFi has changed, and the balance between alpha and risk in DeFi has drastically shifted. Well guys, that's all the time we had for today. For all you interested in getting all the latest crypto news, make sure to like and follow. Till next time, cheers!